Because the real issue we have about the banking industry is twofold. One, from a societal point of view, you want your banks to lend, and obviously cutting back your risk-weighted assets to boost your CET1 ratio, which is in essence what we've done over the last decade, is from a society point of view bad, right? The economy can't grow if the banks won't lend, full stop. The other point here, and this is where we're going to now, and that's why you bring up a very good point, Steve, is what is the rate of return on the capital and the very high levels of capital that are involved in the banks at this particular moment in time? Is that a rate of return in the medium term that keeps those banks solvent? You know, we play the trick, high margins to the consumer, cut your RWAs, build up your CET from your profitability and shrinking your balance sheet. But where next? Are these good enough returns for investors to take on board? And I think that's where you're going to become extremely regionalised. In markets where you have a degree of oligopolistic nature, you will be able to make profitability. ABN AMRO, perfect example. You know, two competitors in one market. In markets where you have deep levels of competition, and I'm pointing the finger straight at Germany here, that is an unprofitable business and will remain unprofitable because there are people out there who only want to make €1 a year and they're happy.
I totally agree with you with Germany. I mean, it's a very tough market. It's a very fragmented market, and therefore returns are actually pretty low.
Disastrously low, actually, for the health of the system.
I say this in bated breath because I know people start panicking about banks all of a sudden. Is there a German banking crisis that should have happened akin to a Southern Europe one, an Italian one, have you, that's never happened, that actually should have had a greater shakeout in German banking? I'm not just talking about Deutsche here, we talk about Deutsche too much. I'm talking about the Landesbank or what have you as well. Is there something that should have happened here that hasn't happened, that was disguised by QE or whatever it was?
I don't think it's a topic of crisis. I think it's a topic of efficiency. So the banking system in Germany is very different than it is in the rest of Europe. It's very fragmented. There are a lot of Sparkassen, a lot of Volksbanken, and a lot of Landesbanken that, of course, have a cost income of 80%. How can you achieve good rates of return with an 80% cost income? And plus, on top of that, I have the feeling that German customers are much more risk averse than the rest of Europe, and therefore they tend to go with plain vanilla financial products, and plain vanilla financial products have lower return.